I just heard a piece of the Berkshire Hathaway annual shareholders meeting, and I teared up a little bit because one day the market is going to be closed on a random day, and it's because Warren Buffett passed away. And it's not about idolizing someone. It's it's the idea that he believes in investing. And investing means you're counting on the work of other people. And you're counting on other people believing in those people. Investing is a circle of belief. It's much more than just ticker symbols and dollar amounts. It's human beings and human beings working collectively together. Okay, I'm gonna change. I'm gonna watch the Berkshire Hathaway annual shareholders meeting all the way through. I will edit this out and I will put some key aspects together and my thoughts on it. That was an absolutely terrible idea. I'm creating content and it's a new channel. Like, you do not want to watch a video of someone just interrupting Warren Buffett. Not a good way to go about it. What I'm gonna do instead, I'm gonna break down the key points. The next, 6 seconds in 4 words what the whole Berkshire Hathaway meeting was about. So, he says, don't bet against America. That is 4 words, and I made sure. What this means is invest your money in the S&P 500. That's it. S&P 500, the top 500 companies in the United States. That's what his advice is. That's what he's telling all his relatives to do. And he's got his own company, so he probably would want you to invest in his company. And there's a quote going around from him saying, "I would not bet that Berkshire Hathaway, his company, would beat the S&P 500 in the next 10 years." That's a bold move, and that's why he's a leader that people trust.
Have no fear, students. Because I am here.
So if you're going to be a little Benedict Arnold and short the market, you're going to have a bad time. Something else that he touched on was the Louisiana Purchase. This is really interesting. So I have this hobby too where you pick random things that happen in US history, even though I don't really think history is all that random. I just pick random dates and I'm like, 1883, what if I invested in the S&P then? What would happen 10 years from then? And I do all those little games. So what he did is he went back to the Louisiana Purchase, and he was just talking about that as an investment. Louisiana Purchase is when the United States stole a bunch of land from bought a bunch of land from the French for $15 million. Now at the time, that was a very fair price. It was 3 cents per acre. Not bad. Some would say, hey, you're buying at the peak. What are you doing? Or you're getting an okay price. It's not a great deal. I started thinking about the Louisiana Purchase kind of like investing into stock. You're buying it at the peak, or you're buying it at a decent price, I guess, somewhere where it's been within the last 3 years. You're not getting a crazy epic deal, a once in a lifetime crash that happened already 3 times in my lifetime. It's not one of those opportunities. It's just, hey, this is a fair trade, I guess. Now, let's just say that Britain came over and they were like, how about this? We buy that land off you for $25 million. You just made about 66% profit. That's pretty gnarly. Now, if you could do that with stocks, a lot of people would be like, I'm selling, I'm selling, I'm selling. 66%. Most people would sell. And they'd be like, 66%. You just can't get that. The S&P 500, the top 500 companies for reference, only averages 7% annually in a 100-year history. So when you're thinking about the return of flipping something for $15 million, for $25 million, you're like, oh, no brainer, I'm selling it. But the US, they applied the greatest investing strategy of all time: buy and hold. So they just bought it and they held it. Today, that land generated about $60 billion. That's a lot better than $10 million. Now, I know what some of you are thinking. You're thinking, well, they would have had that $25 million and they could have just went and bought land elsewhere.
Location, location, location.
I felt like a pawn saying that because I'm not really into real estate, although I did watch all of Graham Stephan's video on real estate. I watched all of Our Rich Journey, flipping real estate, fixing up do-it-yourself videos. I watched every real estate video I could find, but I'm not into real estate. The point is, finding a good quality company is not easy to do. So when they discovered they Columbused it, and they took it and they turned it into something, $60 billion worth. You're not going to be able to just find something that could generate that much profit easily. Sometimes it's better not to increase your guaranteed cash payout and stick with your investment, because that's what an investment is. It's something that appreciates throughout time. So that's the point. Don't be flipping and trading and seeking profit. Seek quality companies. Again, I'm blessed. And so is this message, brought to you by allergies everywhere. I've been doing the Wim Hof method low-key, been doing those. He's the Iceman. You could check him out. I guess I'll leave a link in the bio. And I think of that as an investment in the body. I've been doing that, I don't know, I think it's been 30 days at least. I haven't looked because I don't want to get cocky with the number. Why am I talking about Wim Hof? I am losing my core audience. Stick to the plan. Warren Buffett, Berkshire Hathaway. The final point that he made was, I sold all the airlines. And people were like, Mr. Financialism, I told you. Warren Buffett, he did not stick to his own plan. He didn't buy and hold. But Warren Buffett has an extra ingredient, chemical X. Buy what you understand. Now, most of us, we're like, that's a good company. Warren Buffett buys that.
Let's get some Costco. Let's get some Apple. Let's get some Microsoft. Let's get some Netflix. Let's get some Tesla.
But we don't know the ins and outs of the company. Now, that's not bad. That's not wrong. In fact, a lot of research shows that if you just throw darts at companies that people know, you have a pretty decent shot of beating the market temporarily. Now, in the long run, you're probably going to burn out, but there's going to be like maybe 2 or 3 or even 5 years where you're like crushing the market, and it only counts after 15 years. Key ingredient, understanding the company inside and out. Airlines will fundamentally change. We don't know what's going to happen. He doesn't know what's going to happen. He took the loss. I made a mistake. And it's okay to sell your stocks if you believe you made a mistake. Now, he's not selling them because their price per share dropped. He's selling them because the business will change fundamentally. Now, a lot of us, hey, we don't care. We'll buy low, sell high. We just gonna go in and get those airlines. I got some airlines. I was tempted, I got some airlines. I got Boeing, I got American Airlines, I got Delta. And, they're all in the red. And I'm like, well, should I sell it? No, I'm not gonna sell it. My plan was not to sell it, so I'm not gonna sell it. I'm not gonna change my mind because, Warren Buffett changed his mind. I'm sticking to my plan. I'm like, yeah, right now, I believe that some of these airlines may go out of business, but in the long run, I think 1 or 2 will survive and they will do well. Do I understand the business thoroughly? No. Is that what Warren Buffett would do? No. That is Berkshire Hathaway's meeting in a nutshell. A lot of his meetings really do sound alike. He's usually breaking myths of investing, promoting some literature about investing where he's saying, the S&P 500 for the last 100 years returned 10% on average, and if you count for inflation, that's 7%. You probably beat a lot of companies if you did that. And don't invest in bonds if you're trying to get a big return on your money, because investing in bonds doesn't make sense in the long run. So a lot of that was still in there. Invest in this channel with your time and your likes and your comments. Now, some of you, I know because I have those insights, are watching this and you're not leaving the comments. But what's cool is you're watching it all the way through. And that is what really counts and boosts it up for the algorithm. Yes, the likes and the comments do matter, but watching it the whole way through, you're likely to see another one of these videos again. But wait, what? You could just click the bell. That lighting is bad, I know, like all the shadows. I'm working on it, I don't know how people on YouTube do it. My eyes are burning right now. It's not that bad, but like over the long run, like you'll see like Andre Dzik walking around doing his magic tricks, but he's gonna be blind, and there's nothing wrong with being blind, but like I don't want to volunteer for that. I'm used to the privilege of sight with my eyes. All right, that's all for today. My allergies, what's happening? I've been doing the Wim Hof. That's not how you say his name, is it? All right, see you guys. Leave a like, leave a comment, leave 2, and share it with your friends. Don't forget to click one of these videos right here. That's probably the Flash Finance playlist. You can view all the most amazing, epic, gnarly investing strategies in about 60, 120 seconds. Send that playlist to your friends.